What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm going to be looking at the Mendoza. This is Mogul's most recent pad split in Decatur, Georgia. It's quite a bit sold out already. There's only 72,000 remaining out of an original 165,000. It's a 7-bedroom, 4-bathroom with 3 en-suites, pad split. It's the yields look like what we've started to come to expect from them, just below 8%, although this one's even a little bit tinier, or a little bit lower than the last one. I think we saw 7.9. I think this is just going to be our new normal, what to expect, especially because they just keep selling out, right? Like they're selling these out extremely quickly with this lower yield. So if it's easier to find these deals, why wouldn't we just keep pumping them out, right? I understand that's the business that they're in. It's not a bad yield at all, especially when you compare it to a lot of the other platforms. But today I'm going to actually look at a similar property that I bought through them last year in the nearby location that's doing really well for me, and we're going to have a little bit of a comparison there. I just think it's I'm not really sure what's going on. I don't know if the demand for these has just picked up and so it's harder to get them, if there's in order to just put out as many as they want to right now, they're just having to not find as great a deal. I'm just not really sure. But it seems pretty consistent at this point. So this is what I'm expecting. As usual, I have no idea what the Mendoza name is a reference to. They did mention it has 3 en-suites, which is, I believe, I know this changes the amount of rent that you're typically getting per room. I'm fairly certain that it also has a positive impact on occupancy. They mentioned it's close to a bus stop, like we always like. It's been, they're talking about having a renovation and amenity package intended to, make it a better pad split listing. One of the things that's not clear for this one, it's a property that's on the market. It's pending. We're buying it for $50,000 over what it's listed for. They don't really describe it, in the description. It's not extremely clear that the seller is doing that work for us. Like it has been, it's been more clear in the past. So I'm not really sure. I mean, I'm just assuming that's what's happening, but it's not completely clear to me that that's what's happening based on, what they've written up. They're saying, because they've purchased, and this is even more interesting, right? Purchased off market, but it is clearly listed and pending. So I don't know. It seems like, I'm starting to have more questions about the actual setup, and I'd, hopefully, they've just been pumping out deals left and right. Hopefully they'll, get to a point where they can continue to do that, but also, maybe give us just a little bit more transparency, a little bit more detail. I'd love to understand, where the delta is between we're purchasing it for $340, currently listed, at $289. What's going on there? My thought, and I don't know that this is the case, is that this is another one that they have, where they're basically having the seller do the conversion, do the furniture, get it listed on Padsplit. But they didn't explicitly say that in this one, and I'm not really sure why, right? Spans over 18 feet. Yes, it's great location, bus stops, another standout offering. Yeah, so that, I'm just not sure what's happening here. But, numbers wise, it looks very much like what we saw before. I'm going to get some of the easy stuff out of the way. FEMA flood map looks good. It is somewhat close to this flood zone, but not close enough for me to worry about it at all. Obviously, as always, you want to do your own due diligence on these. Which reminds me, please like and subscribe. In the description to this video, I have links set up to all the places where I'm currently invested in fractional real estate online. Please do your own due diligence on all of those links and also any of the properties that you see me talk about. Also in the description of this video, I have a link set up to a Discord channel for fractional real estate investors. There's over 200 members now. No cost. Nobody's trying to sell you anything, except there are some scammers that might identify you by being in that group and then try to sell you something, but don't buy anything from them. But we're just there talking about fractional real estate investing, different platforms, different strategies on a daily basis. So please feel free to jump in there and join the conversation. Okay, so back to this. Yeah, FEMA flood map, I'm perfectly happy with this, but you do want to take a look at it yourself. If you're, just like always, I'm trying to share my thoughts, the things that I look at, all that about these properties, but you really do want to do your own due diligence. I only looked at spot crime. I didn't pull up any of the other because I've looked at the crime in Atlanta quite a bit. This is actually a fairly clean spot crime map for this market. And I know this isn't Atlanta proper. We're in Decatur here. But this is about 3 weeks of crime showing up on the map. And, when you zoom in, yeah, there are a number of thefts nearby. But this is, I don't even see a shooting on the map. If I zoom out, yeah, there wasn't a shooting. So that's a nice change compared to some of the ones that we've looked at recently. All right, if you've watched any of my other videos, you'll know that let me talk a little bit about the physical characteristics of the property. They do have, let's see, it says under construction, and this is, what it's supposed to look like. So, I mean, it makes me, there's all these hints that this is what's going on, right? But I think I'd just love it if they came out and told us, and I don't know why it's not in that description, if that was just an oversight on their part or what. But anyway, this is supposed to be the end product, bedroom, bathroom. And then these things labeled ensuite are actually the bedroom and the ensuite, I believe, because, it's not just the bathrooms there. So those are the three bedrooms with attached bathrooms. And then these are the 4 that have their own. 1853 square feet, not it's right in line with what I'd expect for 7 bedrooms for a pad split. They mentioned, the bus stop's 200 feet away. When I was looking at the property itself, it doesn't look like there's any street parking on this street. I could be wrong, but when I went up and down the street, it seems like you're not allowed to park on the street. You do have a long driveway, but that doesn't really help us with pad split because you can't do tandem parking. But you could put 2 cars. You could probably put maybe do parallel parking here. But if you have to, and if you need more spaces, they could do something here. One of the things I wanted to mention, because I don't know that we've seen it really this much before, a lot of people are going to see the trees and think, oh, that's a nice amenity on the lot, right? You get shade, it lowers your heating, or it lowers your cooling bill in the summer, right? Having a nice shaded property. But sometimes the maintenance of trees on your property can be extremely expensive, especially when they are close to the home. Maybe you can see, looks like an awful lot of, I think these are pine needles on top of the roof. So you end up having, having to clean off your roof a little bit more often, clean out your gutters more. So although a lot of people like to have trees in their yard, we will see the benefit, I would expect, in a lower cooling bill because of the shade. I'd also expect to have some expense, related to those in the future. Not a big deal, but something I wanted to point out because I'm not sure that we ever really talked about that before. All right, I'm going to look at the valuation real quick. So, it looks like we have it under contract or we're buying it for $50,000 over what it's currently listed at. Zestimate's $284,000, right? So, what did I say? $340? Yeah, $340. So we're paying $55 and change over the Zestimate. Redfin's estimate is, wait a minute, what are we doing there? Yeah, Redfin's estimate's a little higher, so it's not quite so bad on there. And, Realtor's giving us these. So again, slightly better if you look at the collateral analytics, but about the same. Overall, they're all very close to each other, which usually leads me to believe that they're going to be accurate. When you have these really wild differences, I think it's an indication that they're having a harder time actually just, coming up with comps and doing it properly. We do have an appraisal contingency in the contract. I didn't see anything in there about it's going to be put on Padsplit. It's going to be delivered, as an operating Padsplit or converted. So, I'm somewhat confused on what's going on because this listing says 5 beds, 2.5 baths, right? And so our listing 7 beds, 4 baths. I'd just like a little explanation how we're getting there. I'm assuming it, like I said, I'm assuming it's the same business plan that we've seen. I'm just not sure why we're not being told that. Let's see. But so, if it is the case that we're buying it as a 2.5, and they're, and the seller is doing that work for us, is, around $50,000, $55,000. Is that reasonable to add 2 bathrooms? It looked like it was it already renovated? Yeah, I mean, it looks like it's already, reasonably renovated. So that's a decent amount of money to, furnish it, create 2 bathrooms, or 1.5 because it was 2.5 and we're making it 4, and then create some bedrooms. Yeah, that's not a crazy budget to do that. And if they're doing that for us, I can kind of see, that seems somewhat reasonable. If we were just going to go buy this and do it ourselves, what's our budget going to look like? Yeah, I mean, that actually seems within the realm of responsibility or possibility. I don't know where responsibility came from. It is 5 a.m. I haven't been to bed yet. So that is part of the brain not working right. But yeah, I think, I can see that being somewhat, a reasonable thing that we negotiated, depending on, exactly what that scope of work looks like. But that's why I would just always like more details versus less, right? I'd love to see, there's got to be more, this agreement has to be in place somewhere, and I'd like to see that document as well, not just the purchase and sale agreement. But something that's actually outlining, what else is happening to that property. And I don't know. I mean, maybe I just keep missing it. There wasn't, some of the, I don't even see anything that like talks about personal property being turned over and whatnot. So anyway, seems somewhat reasonable from that perspective, but I wanted to show you something, and this was brought up in the Discord, that makes me think, okay, so let's see. It's not the greatest, right? So our total budget is on this is to get the total budget, the easiest way. I mean, maybe they actually put it down here. Do they? Yeah, nope. You purchase, you have to add all these things together, right? So yeah, that's the 408 here. Is that right? Let's see. Let me compare that too. So this is the Mafee. This is a property I bought from Mogul. What did they project for their year one? 10.3%. I've been right around 10% on this one. So this was, has been doing really well. This is what I have this map up for. They're this close to each other, right? They're 7-minute drive apart. Presumably basically the same market. This one, our total budget was, let's find it here, $356,000, right? Versus a total budget on the current offering of $408,000. Both of them had 7 bedrooms. The Mafee was projecting $48,000 in first year revenue versus, $53,000 is the prediction on this one. What does that look like? You know what? I should have done some math on that, right? So it's like $5,000 different, about 10% different. We're paying more than 10% more. So the math doesn't seem to it seems like we're, and especially when you look at the projected yields, it seems like we're just getting a worse deal than what we got on the Mafee. Now, on the flip side of that, we are getting something in a market that we know is a good performer because we have other properties there that are working. And a couple of other things. The Mafee, it has less en suites, right? It's a 2-bedroom, 7-bath, or no, it's a 7-bedroom, 2-bathroom home versus a 7-bedroom, 4-bathroom home. But it's also considerably bigger, right? I think it's 350 square feet bigger. I guess it's. I don't know that it's fair that I just keep comparing Mogul's current deals to their older deals, right? Because if we compare them to other platforms, I still think they're superior, but it just worries me that there's this trend downward, right? I would like to see. Sure, it's one thing if like the occasional deal is a little bit worse, but we're still, people are still buying them, so let's go ahead and sell them. But I'd like to see a couple, something in this neighborhood again, which we haven't seen one of these in a little while, right? And this is Core Plus strategy, 14.6, right? And this Core Plus strategy, 11.8. I mean, it's a huge difference in returns. In a very similar product, like I can't imagine that the risk profile is lower on this one than on that one, right? And so I'm just less excited about this deal than I was about that deal. And that has been one of my better performers. Let's shut the refinance off too and just see. It gets us to 11.1 and 10.9. Not great compared to, you can see why early on I was excited about Mogul, because there were a lot of this was kind of their norm, right? Like we saw deals with these higher average yields. Now, maybe they're not actually going to hit these projections, right? Although they did hit, it does seem like they're hitting the year one yield projection. So maybe they're just trying to, again, maybe they're just trying to be more conservative in their projections. But what it seems like is that we're just starting to overpay a bit more, right? Like that's early on, I had a couple of worries about, are we paying too much? Here, it just starts to seem like it's become the norm, right? I mean, especially when we had the ability to, the Mafee, this was already operating. We bought it as is. We looked at the value of the property. We weren't like paying extra to get it converted because somebody had already done that. Now, maybe we paid a little bit more because it was already operating and everything. But obviously, very similar properties, and was it $50,000 less total budget? So I don't know. I don't want to belabor that point. What else as far as, so I checked this is, makes it worse. Over the last year in this zip code, property values have gone down 13.4%. So I'd expect to be able to buy this at an even bigger discount relative to the Mafee, right? And so it's just I'm not sure what's happening. Hopefully, the webinar is coming up. It's actually next week. I think I had said it was this week in an earlier video, but it's coming up next week. I'd be interested for people to ask questions about, one about why are yields trending down, right? That's a question I like to ask. Why are we paying more for these than we have in the past relative to other ones, similar ones? Especially, I'd expect that values went down 13%. Why did this, it just seems like we should be getting a better discount than we did a year ago. Not a worse one. And it hasn't been exactly a year, but, but even if it's 8 months, I mean, there's some time. Zillow does think we're near the bottom, right? It's projecting that we're going to have an increase. I think, just like I've said many times, whether or not, we actually see markets rebound is going to have a lot to do with where interest rates go. And, even though they've been trending downwards, they've been very sticky, right? 6% seems like a number that average interest rates, for 30-year fix, every time they bump into that, they sort of pop up a little bit, just like they did this past week. So we'll see what happens there. But this just makes me think even more that for some reason we're paying more than we need to be for these. Now, the other thing here is it's mentioned that this is purchase off market, and I really don't understand that because it is currently listed, right? Like when something's listed, and under contract, on Realtor, how are they saying it's off market? Now, another potential thing that could be happening is, and this happens in my market a lot, a wholesaler gets it under contract and then agrees to sell it to us. Now, normally you wouldn't see this huge change in price if that's happening. So I don't think that's what's going on, but it could be, right? There could be like a dual, like, okay, they're buying it and we're buying it from them. I don't know. I actually didn't, I could have figured that out, I guess, by digging into the names on the contracts in the public records. If anybody has time to do that, feel free to, or it'd be awesome if you did and you shared it in the Discord. Ike and Brad have shared some stuff that they've looked into on this, and everybody who does, I really appreciate it. I think that's the whole purpose of having that Discord, is for us to work together, figure out, is this a deal, what are there risks we're not seeing, all that sort of thing. But yeah, that's something we could do, is see like, okay, who's actually selling this to us? Is that the owner of record, or is this being basically wholesaled to us, or is there an entity that's buying it? We agreed to buy it from them. They're actually going to close, do the work, and then sell it to us. I don't know. That's just sort of an open question. Let's close these. And yeah, as far as their projections for income, makes, I got pretty close to their number. So what did they have? They had, I think $53,000. Yeah, 53,338 in top line, or 53,388. in top line revenue. Man, I could not talk today. I'm sorry. I should have taken a nap before I did this. And so if you remember, when I'm using Padsplit's calculator, what I think Mogul is using for their top line is this effective gross income number, which is already taking out move-in fees, vacancy, and concessions. So 61,000. And then you have to take out the platform fees as well. So 61,000 minus the 9,000. Okay, that'd get us to 52. 52 is really close to what they, really close to this 53. So, I'm pretty happy with that number, right? And as I've mentioned lots of times, I feel pretty confident that, I trust the Mogul, the guys that are running Mogul more than most of the people running most of the other platforms that I've interacted with so far. So, I think if this is what their projection is, it's $1,000 different from what just the generic tool tells us. We know they have, the tool does take into account already that there's additional, the 3 ensuite rooms. But it doesn't take into account that we're trying to be a sort of higher end product, right? And so I'm perfectly happy with that. Now, obviously, if this is something you're going to put a bunch of money into, you might want to dig into those numbers further. But this is what I've got time to do today. I know all of these are probably blending together because I'm saying a lot of the same things, right? Like, it is just, well, this one's a little different because it's not super clear what the business plan is, right? It's not, is the seller doing this? It doesn't seem like we're doing it because we don't have, it doesn't seem like Mogul is actually doing it because there's not, is this the one? Yeah, because there's not the money built into, we've got closing costs, loan costs, vacancy reserve. Yeah, it's definitely, there's not the, bigger lump in here that we saw on one of the more recent ones. Oh, maybe they're breaking it out better for us though, so it's clear. So I'm not assuming that there's something else random in there. And I think this miscellaneous, this is actually their fee. And so maintenance reserve, vacancy reserve, loan costs $5,000. So I wonder if they're buying 5%. So well, it says 5%, but it's not equaling 17 like the, because it's 5% of the loan versus of the purchase price. That seems pretty high to me. Maybe they're buying down the rate a little bit. Again, they're definitely classically trained real estate finance guys. So if they think it makes sense to buy down the rate, I'm all happy for them to do that. That's always just a math decision and looking at a little bit about the future. Which reminds me, I didn't really look at the interest rate, 6.75. It's in line with what we've seen on these other ones as well. So Yeah, am I going to buy into this one? Probably not, because I do own, well, let me just show you which ones I own. I own several of these, let's see, the Rhodes, no, that's a pad split, but it's not. This is in Mesa, Arizona. The Mafi, so this is the one I was just talking about. Yeah, that's in Decatur. The Celeste is in, oh, no, that's not it. The Victor is another Atlanta pad split. The Andres is another Decatur one. Has this one done? Oh yeah, this one's had some struggles. The Chelsea, that's the one I think yeah, this is another Atlanta one. The Ratliff is a Douglasville, Georgia. The Ven, Littleburn, Georgia. So you can see I own a bunch in, that's Atlanta, Georgia. I own a bunch of these in the, and that's a Tempe, Arizona one. In the Arizona market, a bunch of the pad splits. If I didn't have one, and I wanted to put some money to work in real estate in pad splits, I don't think there's a better option right now. Like, there's not another platform that I'm aware of that you're going to get that 7.8% yield or whatever it's going to be. But at the same time, I just start to get worried about, is our basis going to be too high on some of these? So if I were to buy it, for that yield, I just really want to expect to hold it maybe even longer than what they're projecting. Like, I just have a hard time, once we start with that higher sale price or that higher purchase price, getting out here to, what am I doing? I don't know if you guys noticed, since I got the new tablet, I have such a terrible time with this touchpad. Yeah, okay, dispo price $456,000 in 10 years. And it doesn't seem crazy, even if it's $289 today, right? So I don't know. That's the only thing that I worry about. If we're paying too much for these, is this a real, is our sale price realistic? And, that just depends on what, if people will buy this as an ongoing business in the future, maybe they will, right? I think the more pad split becomes a asset class that people understand and investors buy for the yield, the more demand there will be from investors. But at the same time, and I've mentioned this in several videos, that there's also going to be more people converting properties to pad splits, and then that's going to create more competition and lower, potentially lower yields on these, right? If there's a lot more of these available, we're going to have like lower and lower rentals on them. And we've seen this. I mean, obviously it's just basic supply and demand, but we saw this over the last, 8 or 10 years with short-term rentals. At a certain point in time, you could buy any house in my market, like literally any house you could buy listed on Airbnb, and you'd probably make money with it. And I mean, especially in a certain, band of price points in certain parts of town, it was really easy. Every single home made sense. Fast forward to today, and my team works really hard to find short-term rentals that actually work for people. It's just a much different, and it's because, in large part because we had a huge influx of investors buying homes, converting them to short-term rentals. And I think we're going to see in, this market, the Decatur, Georgia market, the Atlanta market, has had pad splits for longer than a lot of others. So maybe it's a little bit more mature. Maybe it's also why we're seeing, the decline in yields, because there's more people that are competing to buy these. Although seems like it's just being bought and converted. So I don't know. I think that I'm just sort of at a loss. I'm not sure. I just would like more details, and I know that's like all of my due diligence videos. I'm always asking every platform, hey, answer more questions, tell us more things. On this one, especially, I think it's pretty reasonable to want to know like what the business plan actually is. How is it? Who's doing the converting? Is it us? Is it the seller? What's the scope of work? What's that costing us? All those sorts of things would make me a lot more comfortable, because if we're buying this house, if you're thinking about it as, okay, this is a reasonable price to pay for the house, plus a reasonable construction budget, and someone's not just making a big chunk of cash by being the one to sell it to us, it would make me feel a lot better about it, right? It still creates some problem with, okay, is it really worth $50,000 more just because it costs that to convert it to a pad split? But again, I think the answer from an investment perspective is yes. And then it's just a matter of, okay, well, is the market going to be there when it's time for us to sell it? I think that's really all I want to say about this one. If you're buying this one, I'm curious to hear about it. So feel free to drop it in the comments or jump in the Discord. There's not a whole lot of it left, right? I mean, 72,000. It's amazing how fast Mogul has been selling out their properties. Like if you compare them to a lot of the other platforms right now, you know, they are a clear winner as far as being able to attract capital. I think it makes a ton of sense because so many of the things that they're doing just seems, you know, it seems to be they're going about it the right way. My concern from the very beginning is, you know, is their average deal going to decline? It seems like that's happening. Hopefully it's just like, okay, we're at a certain point and it's not going to go further. Because there's no real reason that it has to, right? Like, other than it is really hard to find great deals, right? It's easy to find good deals. It's tough to find great deals. And so as as there's demand for more and more product, maybe they're just not, you know, cherry picking deals, you know, getting the true low hanging fruit of fantastic deals that they were getting early on. I mean, that's what it looks like from my perspective. I'd love to hear from them about like what's actually going on. Is it just significantly more conservative underwriting? I don't think that's the entire story because it does always recently look like we're paying a little bit more, especially on this one where we have like a direct, you know, we can compare the Mendoza directly to the Mafi, and, you know, in a very similar market, although are they different zip code? Yeah, they are different zip codes, but very similar market. You know, they're both in Decatur. They're both 7 bedrooms. You know, the yields are within 5% of each other. No, within 10% of each other. And the prices more than that. You know, the total budget's significantly more than that for the newer offering. So anyway, that is all I'm going to talk about, or I'm going to say about this for today. Until next time, and you know I'm going to keep making mistakes because how many I've had in this video, but until next time, I'm going to just keep making mistakes so that you don't have to.